Hello guys, welcome to today's video. As a funded trader, I have taken and passed multiple profit challenges. So I am here to share a proven risk management strategy designed to help you pass any profit challenge that you take. Let's dive right in. I know you want to pass that profit challenge.
Yes!
And I know you are eager to know the risk management approach that I'm ready to show you in this video.
Of course.
But before we get into that, there are two fundamental concepts that are very key for you to understand.
Okay.
The first is win rate, and the second, risk to reward per trade. These two fundamental concepts can either make or break your trading. So what do we mean by win rate? Your win rate is the percentage of trades you win out of the total trades you take. Okay? Let's say if you take 100 trades and win 60 of them, then your win rate is 60%. If you take 100 trades and you win 90 of them, then your win rate is 90%. It's simple math. It is the number of winning trades divided by your total trades multiplied by 100, and that gives you your win rate. Now, here's a catch.
Pay attention!
A high win rate alone does not guarantee profitability. The fact that your win rate is at 90% or 85% doesn't mean you are going to be sustainably profitable in trading.
What do you mean by that?
You have to complement that with your risk to reward ratio. And that is why it is important for us to understand what risk to reward ratio is. Risk to reward simply means how much are you willing to risk and how much do you intend to make based on the risk you are taking. Okay, so let's say for example, if you are risking $100 so that you make $200, then your risk to reward ratio is 1 to 2. If you are risking $50 in order to make $150, then your risk to reward ratio is 1:3. With this understanding, let us combine the concepts of win rate and risk to reward ratio. If your risk to reward ratio is 1:2, then it means that whenever you risk $100, you make $200. Now, if you take 10 trades, looking at the win rates aspect, if you take 10 trades and you win 4 out of them, then your win rate is 40%. With this combination, a 1:2 risk to reward ratio coupled with a 40% win rate can make you profitable in trading. How? Let's say you win 4 trades. That means you are going to be making $800 at the end of the day. 4 winning trades times the $200 reward that you make, and that gives you $800. If you lose 6 trades, that is 6 times the $100 you risked, and that gives you $600. When you net that off, you'd realize that you would be making a profit of $200 at the end of the day. This is why you don't need a high win rate if you have a favorable risk to reward ratio. So in this instance, somebody that has a 1:3 or 1:4 risk to reward ratio will be better off. I hope you get the concept. Now let's look at the second example. Suppose you have a 1:1 risk to reward ratio. That means anytime you risk $100, you make $100. The same 40% win rate. You'd realize that winning 4 trades will give you $400, and losing 6 trades will give you $600, and that's going to give you a net of negative $200. This makes it clear that you are going to be at the losing end. So with this understanding, it is important for you to find a balance between your risk to reward and your win rate. If you are aiming for a lower win rate, then you have to make sure that your risk to reward ratio is at least 1:2 or better. And if you prefer a higher win rate, then you can get away with a slightly lower risk to reward ratio. But always make sure that your math is working in the long run. Now, let's get into the risk management strategy that I want to show you in order to pass any profit challenge that you take. First of all, we understand that every Prop-Firm challenge usually has two phases. The first phase usually has a profit target of 8% or 10%. And the second phases usually have just 5% profit targets. All right. Now, I have developed this risk management spreadsheet strategically to help you pass the challenge faster, depending on your risk to reward and your win rate. Now, the approach of this risk management strategy is that you are going to be risking 1% of your account balance anytime your profit is at zero or lesser than zero. However, if you make any profit, you will risk a quarter of that profit in addition to your standard 1% risk. Okay, let me just explain with examples. Let me indicate here as phase 1, all right, of the Prop-Firm challenge that we are taking. And I have indicated that we are using a $10,000 Prop-Firm challenge, all right. We are assuming that is a 10K. It could be a 100K, it could be a 50K challenge or a 5K challenge, all right. Whatever the challenge amount is, all you have to do is change these figures from the current to your preferable amount. I'll be sharing this spreadsheet in the description below. All right. So if you are interested, just go into the description and then you would find a link that would lead you to get in the risk management spreadsheet. So now you could see that this account balance, it runs through. All right. These figures will be changing as and when we update the spreadsheet. So just follow me closely. In this strategy, we are going to be risking 2% of the account per day. However, we'll be risking 1% per trade. That is to say that in the whole day, we are looking at losing. If we lose the whole day, we are looking at losing $200. That means 2%. So that means that when we take the first trade and we lose $100, and we take the second trade and we lose another $100, we are done for the day. Simply put. All right. Now let's go into the risk management approach. Let's look at a win rate. So let me just indicate a win rate and risk to reward. All right. Risk to reward. So let us assume that you have a win rate of 80%. If you have a win rate of 80% and a risk to reward ratio of 1:2. Okay. All right. So we have a risk to reward of 1:2, and then we have a win rate of 80%. That means that when we take 10 trades, all right, that means when we take 10 trades, let me just do this here. When we take 10 trades, we lose 2 and we win 8 of those trades. I hope this makes sense. Anytime we take with a risk to reward of 1:2, when we take 10 trades, we win 8 of them and lose 2 of them. All right. So what we are going to do is that on the first day, we are going to be risking, or in our first trade, we are going to be risking this $100. All right. I've already indicated here. Before the day starts, you know that your acceptable loss per trade is 1%. That is $100. And your acceptable loss for the day is 2%. That is $200. Now, this will change as and when we make profit on the account. Okay. Reason being that we'll be risking a quarter, that is 25% of that profit we have made, in addition to the 1% trade, 1% that we already intend to risk. So today we are going to be risking $100. All right. Now, let's say at the end of the day, we make a win and our risk to reward is 1:2. So that means that our profit is going to be $200 for the win because we risked 100 to make 200. 1:2. All right. Now, the following day, so that takes our account to 2%. The following day, we make another win. Now, note, tomorrow or the next day or in our next trade, we are not going to be risking $100. We are going to be risking $100 and $25. The $25 is the 25% or the quarter of the profit we made. Is that okay? So we are going to be risking $125. So if we are risking $125 to make 2 times 2x, then that means we are going to be making $250 on that trade, and that puts us at 4.5%. So let's say in our third trade, where we are supposed to risk $156, that is $156.25, 1.5%. We take a loss. It automatically brings our account down to 2.94%. But hey, our win rate is at 80%. So out of 10 trades, you're going to win 8 of them. Let's even assume that we lose the second trade, okay, where we risked $136. We lost it. And that takes our account back to 1.58%. Now, we've lost the 2 trades. We have an 80% win rate. We've lost 2 of those trades. And so our next trade happens to be a win. That means we are going to be having a win of $239. And our next trade is also going to be a win. Have in mind that our win rate is 80%. With our second or with our fourth win, we are having a win rate of a profits level of $696, and that is 6.9%. And I'm sure the final win, because in our final trade we are going to be risking $187. So $187, and we are going to make twice that amount because our risk to reward is 1:2. That takes us to 10%. So you can see that we are winning this. We are passing this challenge in 7 days or in 7 trades. Let me put it that way. We are passing this challenge in 7 trades. What if our risk to reward, our win rate is not even 80%? Let's say our win rate is at 60%. Okay, that is to say that out of the 10 trades that we'll be taking, we'll be losing 4 trades and we'll be winning 6 trades. So if we are losing 4 trades and winning 6 trades, how do we get to this profit target sooner? Let's take our first trade to be even a loss, all right? That means risking this $100, we are going to lose it. And so we make a loss of $100 in our first trade. Now, in our second trade, we make 2x, that is 1:2. So we risked $99 and then we made 2x of that amount. And that means we made $198. Now, in our next trade, we make another profit. This time around, we are risking $112, all right? So we are risking that $112 and we are making 2x of that amount. And that takes our account to 3% in profit. All right, now our next trade happens to be a loss. And so we take a loss of $140 because we are risking $140 this time around. Now, out of the 10 trades, we've placed 4. We've lost 2 and we've won 2, and we are still in profit. I hope you get the concept. Let's say we, how do you call it? We take another loss. Let's just assume we take another loss. Okay, then our account is not even in drawdown yet. We are still in profit, just 0.59%. All right. Now we've taken 3 of the losses out of the 4 and just 2 wins. Now we take our next trade and then we make our 1:2 returns, and that brings us back to 2%. We take the next trade and we make another profit, and that takes us to 5%. And let's just assume that another bad day, so we take another loss. That is the final loss with a 60% win rate, right? We take another loss. That takes us back to 3%, and we make profits on our next trade, 1:2R. That is 6.69%. How many trades have we won? 1, 2, 3, 4, 5. Our final trade, our 6th trade, and we are at 10%. Simple. Passed. Challenge passed. All right. Now, let's even assume that we are, having a win rate of 50%. So we get the concept that the win rate doesn't necessarily determine whether you are going to pass or fail. You have to couple that with your risk to reward. And also, the lower your win rate, the longer it is going to take you to pass the challenge. That is also important to note. So let's say with a 50% win rate, it means that we are going to be winning 5 trades and losing 5 trades. With this same risk management strategy, where we risk 1% whenever our account is set at the initial balance or lesser, and then risk 1% of the initial balance and a quarter of our profit. Yeah, and a quarter of our profit. All right, so with a 50% win rate and a risk to reward ratio of 1:2, okay, that means in taking 10 trades, we are going to be losing 5 and winning 5. Say our first trade is a win, risking $100 we make $200. Then the following day we take a loss of the $125 that we risk. The next day we take a profit. I think let's make it a loss profit since it's 5-5, right? The following day we take a loss. Sorry. Okay. So the following day we take a loss. And then in the next day or the next trade, we make a profit. Then we take a loss with our next trade. And then we make a profit in our next trade. See, we are still making progress. On our 8th trade, we take a loss. And then 9th trade, we make a profit at 6%. Then our 10th trade, we take a loss. Now that brings us to 4%. So you would realize that even within 10 trades, your account is at 4% profit. Now, because your win rate is low, it is going to take you more trades to pass the challenge. All right. So given that we have lost 5 and won 5, we are at 4% profit. Now let's keep going and let's see how long it's going to take us to pass this challenge. So we take a win on the next trade, risking $156, and we make 2x on that amount. That takes us to 7%. That takes us to 7% profit. And in our next trade, we take a loss, risking $195. That takes us back to what? 5.7%. And then we go again and make 2x, risking $171, taking us to 9.12%, meaning we passed the challenge. The profit target for the phase 1 was 8%, and now we've made 9.12% on the challenge after 13 trades. After 13 trades, with a risk to reward of 1:2 and a win rate of 50%. Okay. Now, in an instance where your risk to reward ratio is 1:2, however, your win rate is 40%, you can still pass the challenge. However, it is just going to take you more time. To be better off with a 40% win rate, then your risk to reward should be probably 1:3 or 1:4 in order to help you pass the challenge quicker. Because with a 40% win rate, it means that you are going to be losing 4 trades and winning. Sorry, you're going to be losing 6 trades and winning 4 out of them. All right, and that is not good if your risk to reward ratio is low. Okay, guys, that's it for today's video. If you found this risk management approach helpful, don't forget to hit the like button and subscribe for more trading tips, reviews, and strategies. Share your thoughts in the comment section below. I'd love to hear from you. Until next time, happy trading.